right, let's let the fun begin. TQQQ closed at 110.39 today. So it was down today. It's been up, down. It was up to 114. It's been down as low as 109, 110. 110.39 is where it closed today. So let's back up a little bit. So excuse me, the beginning of May, this was put to me at, I had 66 contracts, or 6,600 shares, and then another 10 contracts, or 10 shares, or 1,000 shares for 7,600 shares, put to me at 109. So I held them, went back over $1 million, because we had went under $900,000 at one point. Went back over $1 million. Recently in the last couple of weeks, and I was going to sell at 109 or 110 to make at least $1 when it finally came back, and then I decided to go ahead and sell the calls against them and hold the stock and just sell the calls against them. But I sold the calls to get a good premium, knowing that it was going to get called for me probably. So I sold them at 109. And I got 285, or actually 280 for 280 for 66 contracts in my IRA. For 10 contracts in cash, I got 265. So that would be the break even would be not break even, but if I would do better if the stock was over 1180. Or 1165. So since it was under, I actually did better. By selling the calls instead of holding onto the stock, I made an additional $10,896 compared to what it is now. So I made almost $11,000. But it did go up to 114, so I could have timed it just right and got it, sold it at 114. But I like selling the calls. It did get called for me. It will get called for me tomorrow at 109. I did have one contract in cash and one contract in the IRA that I sold at 110. I think I got $1.40 for it, something like that. Anyway, here's my close for today. So I figured out take the premiums that are still there in the contracts and what they'll actually get sold for and everything. It nets out pretty good, and it looks like I'll have $58,334, over $1 million in our accounts. So got almost $900,000 in Fidelity, 886, almost 887. And so in my IRA, I'm up over 40% now year to date, and we've done about $500,000, a little over $500,000. I'm sorry, not $500,000, a little over $250,000, $258,000 in profits for the Fidelity accounts for this year. I do have a couple of small Roths that we funded. I think they both had about $5,000 in them before, and then we put money into them this year, and for the maximum for this year and last year. Actually, last year and the year before. So 2000, is that right? No, 2020 and 2021. So anyway, this year and last year. So anyway, my wife's IRA has a net. She's got a loan on it, but the net, if you take the loan out, has $110,000 in it now, and so that went up a little bit from 108 from where it was before. So let the games begin. We don't have any kids, so I was thinking anything over $1 million, we can since we do have a large cash account, we can take that out and spend that money. But we haven't done it yet. But I'm pretty encouraged that here it is June, the middle of June, the 18th of June, so it's uh, June 18th, 2021, and we're over 40% for the year already. So if we did another 30% for the rest of the year, and I'm not saying we will, but if we did, that would be a lot of cash. So that would really be encouraging. So anyway, let's look at this. I'm not sure what I'm going to do come Monday. I won't really have much of a position. I do think I have a couple of stragglers in my cash account and my Fidelity account that I had bought at 109. So they're a little bit ahead, but that would be in this number also. And so if it goes up to 114 or something, I might sell those stragglers or whatever. I'm going to try to pick a point good for next year. I have noticed that these premiums are holding even when the stuff goes down. And so the premiums on the calls and the puts haven't been too bad. So I'm just going to try to pick my point. Looks like 2% on $1 million is, if you did 2% for the week, that would be $20,000 for the week. Woo! I mean, that's a lot of cash, right? So if you did 1%, you're more cautious. That would be $10,000 for the week. And even if you did that for the month, that would be great. So probably going to pick my points. May stay aggressive since I do think that these were going to go up till the end of July when earnings come out. I think it's going to raise into that. Apple has not gotten back to all-time highs. Microsoft is closer to all-time highs. But those are the two big stocks that move this. Apple and Microsoft, they're a big part of this index. So we'll see how this goes. Everybody that's been playing along with these, if they got stuck and held, they could have sold it at 114. They could sold it today at 110, 112. This has been moving around quite a bit. So buy the dips, sell the rips is still in order. This is a triple, so it's pretty active. And if you buy the dips and you catch 2 or 3 points, it dips down in the morning, and this thing often moves 3 or 4 points a day. So if you catch it on the dip and hold it, if you get stuck with it, hold it. This thing's risen quite a bit since the beginning of the year. Now I think at one point I was looking at it was up about 20%. I haven't looked recently to see exactly what it is. Let's look at that right now. So if I were to look and see what this guy is, let me look at this real quick. So if I look at this and I see where TQQQ is for the year to date, it's up 21%. So if you look at this, over here, it's up 21%, where the NASDAQ as a whole is up 8.86. So TQQQ is up 21%. So if you take the 21%, but then you look at my yields in selling these puts, I've done a lot better than that. So I've done almost double that. That won't always be the case. So am I blessed? Am I lucky? I don't know about that, but like this time I made an extra $10,000 because I sold the call instead of just taking it at 110. So I got the equivalent of 111.85 and 111.65. And when you're talking about 66 contracts and 10 contracts, then 76 contracts, and you're making $1 something on it, then getting to 10 grand is not that big a deal. 10 grand's a lot of money, though. I mean, 10 grand, an extra 10 grand in a week. I mean, that's real money. So I know everybody can use an extra 10 grand. That's for sure. So I hope everybody else has been making money playing these. I I'd say stay closer to the money as it dips until earnings come out. After earnings come out, I'm not sure what's going to happen. The market may dive again. We may have a lull in the market. At that point, you might want to play further out of the money. Of course, we never know what's going to happen, but that's my analogy right now. I mean, my thought right now is as it's going to go into the end of July, this thing will probably go up. So that would be a good time to play it really close, and then if you got stuck, you'll probably get saved because it will go up before earnings. I don't know if I'd play it through earnings. That's always a risk. That would be up to you whether you want to do that. Playing it into earnings is a safer bet for sure. Of course, we don't know what's going to happen with geopolitical and stuff like that, so we never know. But in any case, over $1 million. Now, it'd be nice if we could hit $1 million just in our Fidelity account. So we're almost up to $900,000. If we take Vicky's out of this, my wife's out of this, so if we take that out, we need another $50-some thousand to not include hers and still be at $1 million. So that would be nice. So that would be the next goal. The goal after that would be to make the whole $113,075, so that we show, when we pull up our Fidelity, that we show all of it in Fidelity. Of course, if we could ever get there just in the IRA, which is at 737 right now, that would be a huge goal right there. So we got some goals ahead of us that would be nice to hit. But at the same time, like I said, over $1 million, we don't have any kids. I don't think we need it. I have spent $17,000 fixing up a old house near the beach this week. And I haven't used any of this money, but I may use some of this money to enrich our lives. So we'll see how it goes. And hopefully everybody's been trading this and doing well with it. If you traded it and you got stuck and you sold at a loss, then shame on you. Don't do that. That's not the way to play this. The long-term chart on this has been spectacular. So if you get stuck, just hold it. I did have to hold it for over 40 some days, and I held it one other time this year for 41 days. So sometimes you'll get stuck, but you make 2%, make 2%, make 2%, get stuck, hold it for a month, make 2%, make 2%. I mean, it ends up being a lot of money. And some of those times I was making 2% and then rolling it and then make another, almost another percent. So that's good to do. You can also swing trade this if you feel comfortable swing trading. Buy the dip, sell the rip, and just do the common. I think if you do these weeklies, you sell the puts on the weeklies, it gives you a little bit more protection. You're essentially selling the stock at a discount. I mean, you're buying the stock at a discount. So that's kind of what the mantra is for this this channel is. You're making a little bit more yield by doing that. So sell these puts. Don't be afraid to stay in the common until it comes back, and let's play this at least until the end of July when earnings come out.